Good afternoon, everyone. Good afternoon. Good afternoon. I hope everyone is well. I hope everyone's doing good. We're going to have us a real interesting discussion today. Good afternoon, everyone. Hope everybody's doing well. I'm happy to see everybody today. We're going to let a few people get in here, and then we're going to go ahead and get started. How you doing, Ethan? Good to see you, Ethan. So we're gonna let a few people get in here, give it a couple of minutes, and then we're gonna go ahead and get started. So I hope everybody's week was well. What's up, GMAD19? How you doing, bro? Nice to see you. Nice to see you. So yeah, let's just go ahead and give a couple of minutes. Everybody can hear me really well. How are you doing, Charlotte? Nice to see you. Everybody can hear me okay, right? I just want to make sure everybody can hear me really well. Yes, no, maybe so. Yes, you can hear me. No, you can't hear me. Okay, so I'm gonna assume everyone can hear me. I'm gonna make that assumption. Okay, so we're gonna go ahead and get started. As people trickle in, they can just kind of catch it. Of course, like always, I save these videos, I save these Instagrams, so that way to view them at a later time. So of course, this is a hashtag get real woke, hashtag make it make sense, hashtag for the free discussion that we're going to have today. Today's discussion is understanding budgeting and saving. I actually had a plan to do a different course this week. However, I realized that I had actually not gone over budgeting and saving. And budgeting and saving is a very, very, very important thing. If you can't budget and save, it's difficult for you to be able to make good credit. It's going to be difficult for you to be able to start a business, etc., etc. So, or at least a scale one to any measurable way. So we're going to talk about that. Now, with that in mind, I developed a workbook. Hey, Chris, how are you? So I developed a workbook specifically for you guys that I'm going to give you guys access to today. I based it off our family workbook, actually, our family budgeting and saving workbook. It's actually that workbook, but I made a few changes in it to kind of adjust for what the average consumer in today's society is doing. I thought I would have it all the way done at this point. However, I've had a very, very, very busy week. And so I still have to link I still have to link sheets, and I also still have to do some error checking in the workbook to make sure everything's functioning and flowing the right way. And then I have to lock the cell so that way, people that aren't as familiar, with Excel and formulas and things like that don't accidentally mess up the formulas and then break the workbook and not be able to use it. So there are a few things. So it's going to take me a couple of hours to get through that. So if you guys can just be patient with me and give me a couple of hours. Once I'm done with it, what I'm going to do is put it in my Google Drive and then share that Google Drive link through my link tree, and everybody will be able to access and download the budget planning workbook, the family budget planning workbook. But we're actually going to in this class today, we're actually going to talk about it. So you guys are actually going to get to see it as it is. So you guys are definitely going to get to see it because we're going to talk about it. So let's go through a couple of things first. It is my firm belief that anyone can save. Anyone. This is a fact of life. Even if it's $1 a month, everyone can save. Unless you have zero income. If you're not making any money whatsoever, you don't have anything to save. Nothing from nothing leaves nothing, right? So that's kind of reality. But if you have any sort of income coming in, you can most definitely save. You can save. Even if you're saving $1 a month, you have the ability to save. So that is first and foremost. And I want to make that very clear because that's very, very, very important, right? If you cannot budget and save, you cannot invest in a consistent or meaningful term. Your income will always, always, always be inconsistent. Always. Always. If you have no ability to budget and save, you cannot invest long term in any meaningful or consistent way. And that is reality. A lot of people talk about wanting to invest and wanting to get into real estate and do all of these great, wonderful things, right? And I think that's great. People want to invest, and I think it's great that people want to build wealth, and I think it's great that, you know, all of these ideas and things are coming to people's mind, and they want to do that. They want to grow. It is evident that our community at this point in time in life want to be able to grow their wealth and their income, and that's great. But if you lack budgeting and saving discipline and knowledge, it's over. You will not be able to scale in any way, shape, or form. Your wealth building will not happen for you. It just won't. And that's just me being real with you. So here's the other thing, right? If you cannot budget and save in your personal life, you will never be able to develop, grow, and scale a business in any measurable way without the ability to grow and scale consistently long term. You will never have a business. You will always only have a hustle. Let me say that again. If you cannot budget and save in your personal life, you will never be able to grow and scale a business. You cannot do it because you will have no ability to forecast. And while you can hire accountants for that, when you are a startup business, when you are a small business with little to no revenue, you cannot afford to hire the kinds of competent staff that you need to be able to delegate this responsibility. And the truth of the situation is this: if you do not know how to do it for yourself, you will never grow your business to a point to where you can be able to afford people to do that. You may be able to afford an accountant to do your taxes at the end of the year, but to have day to day, looking at your P&L, your cash flow, you know, your income statement, your statement of cash flows, and your balance sheet, you're just not going to have it. And that's real. You have to be able, the same concepts that it takes to forecast and budget in a business, to do your forecasting, your projections, to do your budgeting, to strategically deploy capital, those same things, those same skill sets, they apply to your personal life. So if you develop the habit in your personal life, if you develop the mentality in your personal life, it is very, very easy to transition the same mentality and the same skills into a business. Very easy. And I'm going to show you what I mean when we get into the workbook. Now, why is it important to budget and save? Why? So studies show that right now, the average wealth for a non-retired African American is $13,460. That's total wealth. Total wealth. Total wealth. That's not what you have saved in a bank account. This is total wealth. So this counts your car, all of these things, everything, your car, your house, when you calculate your expenses, your credit, all of these things come into play, right? And the average wealth, total wealth for African Americans is $13,460. That's awful. It's awful. It's awful. And some will argue, well, there's a wealth gap. Well, there is an income disparity, you know, amongst the ethnicities. That is true. That is true. That is there are some studies that do show that for sure. But the reality of the situation, what this really comes down to, if you want to know the truth, it really comes down to budgeting and saving. That's what it really comes down to. That's true. So, if you cannot budget and save, you are 10 times more likely to default on payment obligations, which will affect your FICO score and the quality of your credit report. If you cannot budget and save, you are 10 times more likely to default on your payment obligations. 10 times more likely. That's reality. So budgeting and saving is very important because guess what? If you're budgeting the right way and you're saving, let's say something happens like COVID and you lose your job. Let's say the government doesn't decide to do some sort of, stimulus. Or they did stimulus, but they decide not to do a new one, which is a debate that's happening right now, right? Well, guess what? If you don't have anything saved because you didn't budget properly, because you weren't thinking long term, you're going to begin default on your payment obligations. That's reality. Defaulting on your payment obligations is going to mess up your FICO score and the quality of your credit report. Defaulting on your payment obligations and messing up your FICO score and the overall quality of your credit is going to make it difficult for you to qualify for things. Which means that if you're trying to look long term and start a business, you are at some point going to need a business line of credit. Guess what? As a small business on the retail side of lending, you're going to have to act as a personal guarantor. And guess what? If you have bad credit, you cannot act as a personal guarantor. Your business does not get the funding it needs to be able to grow and scale. Such is the importance of budgeting and saving. So what we call budgeting and saving in the business, we call that forecasting and expense management. That's what we call that, right? So, budgeting and saving is a mentality. It's a mentality. It's a shift in mental perspective and a pivot. It's a pivot. It takes discipline and strategic long-term thinking to be able to budget and save. What do I mean by that? Let me explain it to you. So, okay. You have to have the ability to understand that you don't need everything now. Okay, wait. It's okay not to have something. It's okay to see something and not get it. You have to understand the difference between wanting something and needing something. Not every want is a need. Not every need has to be satisfied right at that moment. Some needs can be deferred for the ability to be able to save and fulfill that need later. Some needs are not immediate. Some needs are long, right? So you have to understand what this is. So for example, right? If you like to shop, right? Okay, that's great. You like to say you like catching sales, you like shopping. Guess what? If a shirt costs you $100 and you got a 30% discount on it, you feel like I did that, I saved money, man, I got this for the cheap. That's cool. You still spent $70 on something you wanted as opposed to something you needed. That $70 could have been allocated to something else. And that ability to understand that right there is very important. Okay. I like getting a haircut. I do. I like getting a haircut. To a point. Right? I don't like the time it takes. I don't like sitting in a chair a long time. I figure, I got better things to do with my time, right? But one thing about it, right? Do I need a haircut every single week? Probably not. Probably not. I could get a haircut every other week, to be honest with you. But a lot of people think that they have to do something with their hair every single week. Every single week. Last I checked, the average male haircut, at least in the state of New York, is about $35. Right? So if that's $35 that I've got to allocate every single week, and if we take that over, if we times that by 2, well, 7, 7, and 14, so that's $140. But just think if I would get my haircut every other week instead of every week. I'd just save $70. And I'm still able to maintain and look decent. Because guess what? While your facial hair may grow, the hair on the top of your head does not grow nearly as fast as the facial hair on your face does. You can shave that. You can shave and tighten that up for 1 week. See, it's about what you're willing to be able to sacrifice to be able to budget and save. Yes, I understand women want to look fly and look beautiful, and y'all women out there, y'all fly. But do you necessarily have to get your nails done every single week? Is that necessary? If you know that you make, let's say, $18 an hour, $15 an hour, $17 an hour, does it make sense to go get your nails done every single week? Because if a fill and whatever's called a fill, a tip, all of these things with the long nails and the coffin nails and all of that, whatever it's called, right? If that costs you $100 to get done, let's say, right? Okay, $100 a week. Let's walk into that. That's $400. What if you got it done once every 2 weeks? You just saved $200. Yeah, I'm sorry. And I don't know the cost of nails like that. I don't really, you know what I mean? That's not really, let's say it costs $50 then. Either way, even if it costs $50, that's $50 a week. That's still $200. If you did it every other week, you still save $100 that you could have deployed somewhere else, that you could have put somewhere else. See how this kind of works, right? Like, it's a mentality shift. It's the understanding that it is okay to sacrifice your short-term wants. So, it is okay to sacrifice your short-term wants for your long-term gains. Well, if you do these things yourself, I said, what if you do these things yourself? That's great. You're saving some money, right? And there's nothing wrong with painting your nails yourself. There's nothing wrong with doing that. I mean, they sell nail polish at the beauty supply store, I think. I think they do that. And so in light of that, right, you can definitely do it yourself. Hey, if you do it yourself, you're saving a whole lot of money at that point. A whole lot of money if you just do it yourself. I mean, what is some nail polish remover, some cotton swabs, some nail polish, a couple of the little nail things, what does it cost to go get that stuff as opposed to having someone else do it for you? What is the difference in cost? Let's talk about something else. And I know some people are not going to want to hear this one right here. Let's talk about something else, right? I know of women who go do something to their hair every week. Every week. They got to do something to their hair. Something has to be done. I understand the desire to want to look your best all the time. But some things are just excessive. Especially when when doing hair, I understand costs like $200 or more every time you do it. Plus the cost of the hair and all of that. I mean, we talking like $250, $300 at this point. So you see how all of these excess expenses can be trimmed quite considerably to be able to save money, right? So, I know brothers like, I'm 36. So, I look at things a lot different. But I know the younger brothers out there, they want to go to the club. They want to look fly. They got to have a fly outfit for Friday night, a fresh cut. They trying to catch. They trying to win. They trying to do all of that. That's cool, right? But the fact of the matter is, right, is that a need or is that a want? And let's be real here. Okay, so you spend, $150 on shoes. You got the latest and greatest fly outfit. That might have cost you $200 right there. So where we at? $350 right now. And you went to the club and now you spent money on drinks and all of those things. So let's say you spent $50 on that, right? So we talking $400 right now. You spent $400. All because you wanted to go out and try to catch. Not understanding that oftentimes the person you catch, they not in a better position than you are, in the same position you are. Likely bad credit. Likely gonna bring some drama with them. And what's the point? What is the point? If you shift your perspective and work more on growth and long-term strategy and stability, right? You won't have to catch. It's just going to happen for you. You know, there's an old adage that says you can lose a lot of money chasing women, but you can never lose women chasing money. And that's a fact of life. It's all about priorities. What matters most to you? Is it looking like you have something, or is it actually having something? There's a marked difference. If you want to actually have something, you have to think long term. You have to make some short-term sacrifices for your long-term wealth building plan, for your long-term stability, right? Okay. So it's a shift. It's a mental shift. Now, what do you need to budget and save? What do you need? So first of all, you need a checking account. So if you don't have a checking account, my advice to you is to go somewhere like Chime or one of these other wherever, and open yourself a bank account. You need that, right? So I'm going to start there. You need a savings account. Some people only have checking accounts and don't have savings accounts. If you don't have a savings account, you have no way to segregate your savings away from your spending account. You have no way to segregate what you spend away from what you save. It's all one pot. And when you have it all in one pot, it's easy to spend it all. I generally tend not to keep cash on me at all. I rarely have cash on me. And there's a reason for that. The reason why I rarely keep cash on me is because I know myself well enough to know that if I have cash in my pocket, I want to spend it. It's there. On dumb stuff like sandwiches and things like that. Sandwiches. Like, I like sandwiches. I'll go buy sandwiches. I'll be at the bodega all the time. It's money. What? I might be walking the street and just see something cool and decide I'm going to buy it because I have some cash in my pocket. I keep no cash in my pocket whatsoever. None. Zero cash in the pocket. It is rare that I have it. When I do have cash in my pocket, it's because I went to the ATM machine for a specific thing. That's what I did. I went to the ATM machine for a specific thing, right? I went and got that thing, and that was it. And it was something I needed that they only took cash for. That's how that works. Now, so you need a checking, you need a savings account. You need a direct deposit. If you work somewhere and they give you the option for direct deposit and you're not taking your direct deposit, why do you need direct deposit? You need direct deposit because you're able to track your money better when you have a consistent bottom line, baseline inflow. You got to have an inflow that you can track. Direct deposit is an easy, right? Now, some of you are going to say, but I have a business. And you know, my business is how I live. Then my business is how I make my money. If you have a business that's making money, you should be a W-2 employee of your own business. You should be. Why wouldn't you be? And if you're a W-2 employee of your own business, well, now you can now go ahead and set up a direct deposit. Oh, but I'm a single member LLC. I can take a draw as opposed to taking a salary. You could. You can also flow those profits on your because you took that draw. You're subject to the corporate capital gains tax as opposed to the W-2 tax on some of that income. Depending on where your income level is, it might make more sense to be a W-2 employee, right? And it makes more sense long term anyway to become a W-2 employee of your company. And and some will say, okay, but I have a set salary. That doesn't mean you can't bonus yourself. Executives get bonuses. You can bonus yourself at the end of the year. It's easy. And now as a W-2 employee, there's some cool, wonderful things that your company can do for you. Fringe benefits package. Your total remuneration package. Now you can get your medical, dental, and vision through your company. You can get your cell phone through your company. You can get a company car. You're a W-2 employee. So as a senior executive in your company, the company provides you certain fringe benefits that are a part of your remuneration package. That's how it works. Right? So, but you need a direct deposit. So, the next thing you need is a budget planning workbook. This is what I'm going to give you. I'm going to give you a budget planning workbook for free. I'm going to give you one. Right? And you need a piece of software called mint.com. What is mint.com for? You can go to the Apple Store, the Apple Play Store, the Apple iTunes Store, whatever. I'm an Android guy, so I don't know what y'all really call that thing, but the Apple Store, okay, on your phone. The Apple App Store. You can go to, if you have an Android, you can go to Google Play Store, right? Look up Mint. It is a really cool real-time budgeting software platform. It allows you to connect your bank account, right, and track your expenses and inflows through the app. It's owned by Intuit. Intuit also owns QuickBooks, right? I believe they own TurboTax as well. But so the fact of the matter of the situation is this. You need mint.com to track your personal expenses, right, and your income. And I'm going to talk you through that as I talk you through the workbook. So that's that. Guys, if you can hold your questions till the end, that'd be very helpful. Thank you. I see them though, and use the if you see the question mark box in the bottom corner of the live app, if you just click that and put your questions in there, I'm going to do a Q&A at the end. So beyond that. So those are the things you need. You need a checking account, you need a savings account, you need a direct deposit, you need a budget planning workbook, and you also need mint.com, right? You need that. And if you need help setting up mint.com, I can talk you through it, right? So just reach out to me offline. I'll be more than happy to help you set up your mint.com. I'll tell you exactly what you need to do, what you need to be tracking. But to be honest with you, once you understand the budget planning workbook, you'll be able to set up mint.com yourself. So a predictable baseline stream of income is important to saving and budgeting. Of course, no money, no ability to save. So you need a predictable baseline stream of income first to be able to save. So now I want to get into this budget planning workbook. That's what I want to get into now. I'm going to show you the budget planning workbook, and I'm going to show you the difference between how the 2% live their life and how everybody else lives theirs. See, when you understand the concept of wealth building, you really do run your family finances in the same way you run your business. You run the finances the same way. So, the first thing we do, right? The first thing we do, the last quarter of every year, we start working on this. And I'm going to show you what it is. We start working on a family budget planner. We start talking projections through, right? So as a family, we sit down and we project what we think our income and our expenses are going to be for the next year. We start projecting, right? So we start with a projection. That's what we do first. Last quarter of every year, that's October, November, and December, you should already be doing your projections for the next year. That is very, very, very important, right? So, of course, when you start your projections, you're going to talk about what your beginning spending balance is. What is your spending balance? What you have currently in your checking account. And then you're going to put down what your beginning savings balance is. How much money you have in your savings account at the time that you are starting your projection next year. Now, beyond that, what we start doing is projecting the difference. We start putting in projections from here, adjustments to savings. What do we think we'll be able to save every month in the next year? So what we generally do when we get into our projections is we generally tend to save that box for last, because what we like to do is get into things, right? So we want to get into wages post-tax. We want to get into interest income, dividends, gifts received, refunds and reimbursements. So when you see wages, right? Wages can be your W-2 salary. If you are a waitress, you gotta put your tips too, so you calculate your tips in, what your average tips are. So we start with our wages, right? So for example, if you know you make, let's say, $20 an hour, well, if you look at your income, you'll be able to see, if you look at your check stubs, you'll be able to see what you're taking home post-tax every month. You put that number in the box, right? And you move it forward. Now, if you are accustomed to getting a pay raise every single year, right? Then we have to account for that. So if you know that, let's say you get a 3% every year. So if you take your post-tax money and you add 3% to your post-tax money, that is what you are projecting that you are going to be making the next year. Interest income, if you have any bonds, if you have any loans out there where people owe you money, right? This is interest income that you know you're going to be collecting. You put it in the box. If you have any index funds, exchange traded funds, etc., you want to put those dividends that you are expecting for next year. So dividends are usually paid on a quarterly or annual, usually a quarterly, semi-annual, or annual basis. So if you know you get a dividend at the end of every year, you take that number, let's say it's $120, right? And you divide it by 12. You know you've got $12 coming in to equal the $100 every year, or for that year, right? Refunds and reimbursements, right? If you know that you've got some sort of expense reimbursement that comes from your job, such as educational reimbursement or an expense reimbursement that you covered on behalf of the company and they owe you that, and you know that's like a fixed thing that you do all the time, reimbursements. If you have your own business and you are footing business expenses while your business grows, if you think your business is going to be at a level to where it's actually making money to sustain itself, then you're actually going to begin to reimburse yourself for those expenses. That's a reimbursement, right? Other is any types of income you think you're going to be getting, right? And this is a transfer from your savings account. Any transfers, any emergencies that you think you're going to have to transfer from your savings account, I actually put a nice little box here. That this budget spreadsheet treats transfers of savings as an expense because you're taking it from your savings account, putting it in your checking account, right? Money flowing out of your spending account. So transfers from savings spending account are treated as income for budgeting purposes. When you move money around from one thing to another, it's an expense. That's how it works. Now, let's get into savings expenses, right? So, of course, every month you want to project what you're putting into your emergency fund. If you know you need a new car, what are you putting in your car fund every month? What are you putting in your retirement fund? If you've started investing and you've got index funds or you're investing for, a piece of real estate, what are you putting in your investments to be able, what are you saving for investments? What are you saving to be able to get that income property? What are you saving to be able to get into that index fund? Education funds. If you have children, then likely you have, or you should have, a 529 college savings plan set up for your children. So if you have a 529 college savings plan set up for your children, how much of that, how much are you putting in that every month? Project it. These are your projections, right? And then the other thing that you're saving for. And we go down the list. Home expenses. Your mortgage and rent. What's your electricity? What's your gas? Water, sewer, and trash. Phone, cable, satellite. All the different home expenses. What are those going to be? What do you project those to be every single month for the next year? What is it going to look like the next year? And we go through this. Daily living, children, transportation, health, insurance, education, charities. So this is important, right? Religious donations, charitable donations. If you give a tithe to the church every month, that's, you got to account for that. If you know you're going to be doing that every month next year, how much are you going to be giving to church? And yes, I understand. And then we have obligation. We'll get to that in a second. But yes, let me turn the camera around a second. Yes, I understand that the church says, give out of the abundance of your heart. Give, and it shall be given unto you. Good measure, pressed down, shaken together, and running over, shall men give unto your bosom. And I understand that some people that love the Lord are going to sit here and tell me that, I don't know when I'm going to give the church. I just give whatever my heart feels like giving. That is not how this works. We budget. I have a certain dollar amount that I'm going to give to the religious organization every month. And we're not deviating from that number. That's what it is. I understand the pastor got the building fund. I understand he got the love offering. I understand it's the tithe. I understand it's the, pastor's, coronation ceremony fund and all of these great, wonderful funds and all of that. Listen, I understand you got all of these funds, but the fact that my funds may not be set up in such a way to participate in all of these little funds you got set up to get my money. So what I'm going to do to ensure that I don't give more than I have to give, make sure that I'm able to save for my family, I'm going to set a bottom line number. This is the number I will not exceed every month. I don't care if you come up with 30 funds. I'm going to distribute this money every month. I'm going to 30,000 funds. And if you got 30,000 funds and I only got, $300, you might be getting 1/10 of a penny in every single one of them. That's just it. And we're going to have to work that out. That's reality. Start thinking differently about your money. Your money is like soldiers. They go out to war every day. Your money's job is to take hostages and come back with more. Budgeting allows you to be able to see how your dollars are going to go out and how they come back. It allows you to develop a war strategy for your soldiers to be able to calculate and take hostages. If you do not budget, you are sending your soldiers to slaughter. They will not come back. Somebody else will be taking your soldiers hostage. That is how this works. It's very simple. In order for, if you are giving money, somebody got money. I don't care if you give it to Burger King, McDonald's, H&M. When you give them yours, they got some. And you lost some. That's first. You gave your soldiers away. So if you know how to cook, it's a lot cheaper to cook at home, right? Than it is to be out here, you know what I mean? Like eating out all the time. It's cheaper to cook at home. See what I'm saying? Save a lot of money doing that thing right there. So you have the ability to cook, you know how to cook, and you don't cook, and you make the choice to eat out all the time, you, congratulations, are sending your soldiers to slaughter. Because those soldiers could have been used to capture more soldiers. But because you didn't budget and plan your expenses out versus your inflows, you are giving out more money than you really should be based on your income. The goal is to live below your means, not at or above them. That's the goal here. That's what budgeting is all about. It ensures that we live below our means, not at or above them. See how this works? All right, let's get back into this. So, of course, by being able to budget, right, you understand. And let's turn the camera around. Okay, by being able to budget, right? So because of being able to budget, right, now you can calculate certain obligations. All the obligations, really. Student loans, credit card debt, other loans. These are things, alimony and child support if you have it, federal and state, local taxes, legal fees, all of that stuff. Because remember this, right? These things, like other loans, like installment loans, these things are credit report. So you got to be able to budget and understand what those expenses are going to look like. If you're not sure, pull one of your statements from your lender. If you're still not sure, pull your credit report and take a look at it. It'll tell you what your monthly fee is. So the fact that is, if I'm looking at my expenses and my inflows, and I see that my expenses are a little higher than I would like for my inflows, right? Based on my inflows, because I got to count my entertainment, activities, books, games, fun stuff, hobbies, media, outdoor recreation. You know, if you got pets, it's food and medical supplies, toys for the pets. Like if you got magazine and newspaper subscriptions. If you're saving for a vacation, you know, and when you go on that vacation, what's it going to cost you? How much is the travel going to cost? How much is the lodging going to cost? What's the food going to cost? What are you budgeting? Of course, and most people never think about this, the bank charges you fees sometimes for having your account. So some accounts cost money. They cost. So you got to account for those bank fees too. You got to do that, right? So what you see here is, just a second, let me turn this camera around. What you see here is when you start budgeting, right, you get to really look at what your numbers are like, what's coming out, what's coming in. And here's the exciting thing about budgeting. So let's say that like I'm budgeting and I realize that my student debt is really, really high. And based on my expenses, right, I see that, man, this student debt real high. Well, guess what? Studentaid.gov, you can go there and negotiate a lower payment. Heck, if your numbers are right, they'll give you $1 a month payment. So let's say you were paying $200. If you can renegotiate it to $1, well, guess what? You just saved $199 in savings. You don't know that if you don't budget, if you're not looking at your numbers. You don't understand what's really going out and what's really coming in. See, when you start looking at things, right, because to make a good case for getting $1 a month, you got to show numbers. Well, if you track your numbers all the time, it's very easy to print out your spreadsheet and send over your spreadsheet. Here are my expenses. Here's my income. It don't make no sense. Make it make sense. I need something better. I need a payment arrangement. And it ain't gonna work that out with you. And it'll keep your student loan in good standing. Now you don't have to worry about it going to default. So these are your projections, right? So then what you do, once you got projections down and you started projecting, once you do that, right? Then what happens is every month, I have a sheet for you for your monthly household budget every month. So January all the way to December, right? Now, here's the interesting thing about this. Budget numbers that you put in for that month will automatically flow. There's a formula there. It automatically flows into the budget for January of the next year. And now you actually can see what you actually really took in. Your budget number versus your actual. And you can see the difference. is very important. And now you can start tracking how well you're doing, right? So if your mortgage, or let's say your mortgage, you projected it at $1,100 and it's $1,100, that's going to zero out, right? That makes sense. You're on budget. But if your electricity bill, let's say you budgeted it for $50 a month and now it's at $67, you over budget. You need to turn some lights off. You are over your budget and you need to get back within your budget to maintain your ability to save. It's the same thing. So this is month on month. We're calculating actual numbers now versus what we budgeted. And the goal is to be at the budget or underneath the budget every single month. And here's the exciting thing. What I gave you is as well. So I can take your budget number versus your actual number, and I can actually see month on month, you'll get a real clear picture month on month for each item if you're over and under. And then it'll give you a total number to show you if you're how much over and under you're on totally and what the average is. How much average, what is the average overage that you have? So you can get back in line. In that, guys, at the end of the month, once you get your statement, once your statement period ends, you'll be able to log into mint.com and go into each expense and itemize it in its right category under Mint. So if it's a savings expense, you can put it in your savings and expense column. And after about 90 days, then mint.com learns your spending habits and automatically begins to allocate things where they go. So now you can see your real actuals and put them in your spreadsheet. And look at your actuals versus your budget projections. Why am I giving you a spreadsheet for this? I'm giving you a workbook to do this with, to manually do this, because repetition, practice, a lot of people say practice makes perfect. I don't believe that. Practice never made perfect. You can never be perfect at anything. Practice makes proficient. You become proficient at a thing. And doing this month in and month out on a spreadsheet, right, allows you to get into the mentality and habit of budgeting and beginning to save. Not only that, if you do it in a workbook in your personal life and keep up with these expenses, guess what? If and when you start a business, it's going to be very easy for you to do the same thing in your business. You're going to have the mentality and you're going to be thinking the same way with your business dollars. It changes things when you do it the right way. So I'm sure, and I'm going to be honest with you, right? Last couple of things I want to say before I open it up for questions is this, right? If you are unwilling to be detailed, honest with yourself, disciplined, and consistent, you will not be able to be successful at this. You won't be. You have to be detailed, honest with yourself, disciplined, and consistent to budget and save. And if you're not willing to do those things, you will not be successful at budgeting and saving. You won't be. It takes discipline to do this. It does. It's not just something that just happens. You're not just going to wake up and get it. It's discipline. It's a habit. It's a way of life. Budgeting and saving has to become a way of life for you to be successful at this. And I promise you, if you can get this one concept, it'll open a wealth of opportunities for you to be able to grow your wealth and learn how to grow your wealth, because you'll actually have something to be able to invest. See how this works? Run your personal finances like a business runs theirs. That's it. So that's my discussion on saving and budgeting. I'm sure I'm going to get a lot of questions as you guys go through this workbook that I've created. And, especially as you start filling it out, you're going to have questions. And that's good. So I want you to know that you can reach out to me anytime, if you have those questions, and I'll be happy to answer them. We got a couple of minutes here, so I'm going to open up the floor for questions at this point. Anybody that has any questions, now is the time to ask. Please feel free to ask. I'm happy to answer. I already see one question in here. Let me see. Okay, I started looking at your verification template. How many accounts should I put on each letter? Okay, Anna, reach out to me offline. That's not the topic of today's discussion. So if you can just reach out to me offline about that, I'll be happy to answer that question for you. Okay, I didn't know what happened there. It just paused. Okay, I'm back, guys. Listen, does anybody have any questions, comments, or concerns? Now is the time. Okay, so I'll take it that nobody has any questions. So that being the case, I hope everybody enjoyed this discussion. I hope you guys learned something. Give me about an hour or two, and I'll have the workbook posted in my link tree, and you'll be able to just go into the Google Drive and download it, like some of the other resources I've provided. So I hope this was helpful. I hope people learned something. Again, as you go through the workbook, if you have questions, feel free to ask me. I can't stress enough that you have to be honest with yourself in this thing, and you got to be disciplined. I cannot stress that enough. Wrongful convict, if you can reach out to me about that question, because that's kind of not the topic of today's discussion. So, and that's something I'm actually going to cover at a later time in a different course, actually. So if you can just either reach out to me online or just, I'm going to get there in about 2 weeks. So I'll be there. But yes, outside of that, I can't stress enough, be honest with yourself with these numbers, right? If, the input, you're only going to get out of this what you put into it. And if you're not honest with yourself about what the situation really is, and if you're not going to be serious about being disciplined and consistent, it's just not going to work out for you. This is not going to work out the way you want it to work out. Again, I stress this, and I can't stress it enough. If you really want to grow wealth, if you really want to be in a position to invest and grow consistently and measurably, and see year-over-year growth in your investment strategies and be able to live a really, really comfortable and very enjoyable life, the baseline foundational concept of that is budgeting and saving. It is. There's no way around it. It can't be done. And that's why, a lot of people make money, but a lot of people lose it. It's not how much money you make, it's how much you keep that's important. And the ability to be able to keep your money, the ability to be able to keep your money definitely comes down to your ability to be able to budget and save and deploy capital in a strategic manner that hits your targeted rates of return. But without budgeting and saving, there's no consistent way to do that. There's no long-term path forward for you. And that's just honest. So, I want to leave you with that. I hope everybody has a great day. It's football Sunday, so I'm going to be on that after I finish up this workbook for you guys. So as I said, give me about an hour or two. As always, guys, like, subscribe, share, follow, share this information with anybody that you think that can benefit. The more people that hear this information, the more people that will be able to benefit. As always, we hashtag get Will Roke around here. We hashtag make it make sense. And it's always hashtag for the free. I enjoyed y'all today. I hope you guys have a great day. And as always, if you have any questions, reach out. I may not always respond right away, but I am responsive and I will get back to you. All right? You guys have a wonderful, wonderful day.